Thank you, Mayor and Council, and those in the audience and those watching at home. Tonight I'm going to give a presentation of the 2015 Budget and Tax Levy for the City of Elk River. Kind of an overview of the presentation tonight. We'll start by reviewing the vision and goals of the city. I'll go over a summary of the budget process that goes on for several months. I'll review the proposed tax levy, do a budget overview of the general fund, which is our chief operating fund of the city. We'll also talk about some special revenue funds and enterprise funds. And like the mayor said, we will seek any public comment about the proposed budgets that we'll be going over tonight and tax levy. And ultimately, the council and mayor could approve the tax levy and budget only after the public comment period. So again, the vision and goals, our vision, and I'm going to just read this, is abounding in natural beauty. Elk River is a vibrant, historic river town that promotes an active lifestyle, an innovative and involved community offering unlimited opportunities. So there's numerous goals supporting the vision. I'll go over those. It's innovation, community development, beautification, opportunities, planning and positioning. And underneath all of these goals, there's several tasks and work plans in place to achieve those goals, which ultimately drive up to the vision of the city. So these are overarching goals that support the vision of the city. Now I'm going to talk a little bit about the budget process. This process starts from about April through tonight, December. So you can see it's a several month process. It really kicks off in April when we review the long range financial model of the city. What I do is I do a forecast of the next several years of the city's general fund and several other funds. We always look in long term when we're reviewing the financial picture of the city. So that kicks off our budget process. We kind of set goals and expectations for the departments after that meeting. And the work papers then go out to the departments to start working on. And the departments put together their goals and their budget requests for the next year. And in fact, this year they did it over 2 years. We looked at 2 years expenditures to make sure we saw any big changes coming in 2016-15. Kind of ties in with our long-range financial model. So the departments did work on 2 years this year, so we will have a jump start on the 2016 budget. And the city council and mayor are involved in the budget process from the early beginning, from that long-range model. What they do is they meet with every division manager, department director, go through the line items of the budget, review the goals and the performance matrix of the departments too, to make sure everything's in alignment. And they go through the line items to see what the expenditure changes are, what happened, why did something go up, why did something go down. So we go through all the line items, all the individual budgets, and that was a total of 9 work sessions. And what happens after the council meets with all department directors and division managers, we make adjustments. If there's big picture changes like fuel, for example, just recently we locked in a lower price, we're able to make adjustments in real time, and that's part of the reason why the proposed tax levy is going to proposed to go down over the preliminary one, is because we can make those adjustments. The council ultimately has to set a preliminary tax levy on September 15th, and that's so the notices you receive in the mail here in November are based on that preliminary tax levy. And as I said, the county prepares and mails out proposed tax notices based on that preliminary levy that's set in September. So what happens is, once the final levy is set, the tax statements are recalculated with the final statements you get in March of next year. Again, we're here tonight to have a public comment meeting if there is any comments of the proposed budget after we go through everything. And the council only after that can adopt the property tax levy and budgets. And I'm required to certify to the county by December 29th the final tax levy for the city. And again, we're only talking about the city tax line item tonight. There are a couple other public meetings. Sherburne County will meet Thursday, December 4th. And Elk River Area Schools will meet on December 8th. Please check your statements for the time and location of those meetings. But they will be talking about their specific line items on the proposed tax notices. Next, we're going to talk about taxes and values. I'm going to talk about the public notices you receive, kind of big picture, how's your property tax amount determined, and look at taxable market values in the city of Elk River, what's changed over the last couple of years. I kind of like this slide. It's one of the most important ones. Is it shows the 3 statements you receive during the 2-year process on the property tax statement. It really starts in March on the left side of the screen when you get those valuation notices. Right now the county assessor is evaluating all properties. Next March they'll send out a notice of your proposed value for 2016. What I encourage you to do is make sure you see those statements in March, because depending on how property values change or what portion of the city they're in, that can have a significant increase up or down on potentially city taxes, county taxes, or school taxes. What the council does is they have a board of equalization, usually the month after these notices come out. That's a time to come in and talk about the value of property. Make sure your improvements are in there. Make sure the county assessor makes sure everything's relevant to the sales happening in your area of the city and so forth. So the board of equalization is right after those statements in March. And like I said, the city council approves the preliminary levy in September, and the notices you all received in the mail here in November were based on that preliminary levy. So again, that's a proposed tax statement, it's not your final tax statement. Right now in December, all of the boards will approve their final levy, and you'll get a final statement here in March of next year. So it really covers 2 years, but it really kicks off with that valuation statement you receive in March of every year. The property tax collection calculation system. Here's kind of the macro picture of how property taxes are collected. I'm going to start on the left side of the screen, because that's what the city council ultimately works on. The right side of the screen, which I'll go over in a second, is what the county assessor does when they do market values. So starting on the left side of the screen, working down, the council works on their proposed local budget. And then we minus off any other revenues we receive, building permits, charges for services, interest income. We subtract off all these things against the expenditures and come down to basically what is a property tax levy, the amount needed to balance your revenues and expenses. So we look at all the non-property tax revenues and come up with the difference. That's also known as a levy. On the right side of the screen, the assessor's market value. Right here in the city of Elk River, we have $1.7 billion in total value of all property. That gets timed by some state mandated class rates. For example, residential values, the first, like on a $100,000 property, it's at 1%. On a commercial industrial property, first $100,000 is at 1.5%, and so forth. So I'll go over what those classification rates are, but commercial industrial is different than residential. Again, that's set by state law. So the assessor's market value gets calculated through all these class rates, comes down to basically a tax capacity. In our case, we go from 1.7 billion down to 21 million. So what happens is we take our levy into that $21 million in what's known as the tax capacity rate or tax rate. I'm pleased to announce today that our tax rate will be going down with even the preliminary levy, but it'll go down even more with the final levy here. So again, that levy is divided into taxable tax capacity to come up with what's known as the tax rate. These class rates, you can see the first 500,000 for residential homestead is at 1%. And like I said, commercial industrial, first 150,000 is at 1.5. And then once you go over 150,000, it's 2%. So you'll see there's a difference there. Assessed market value times these class rates equal your individual property tax capacity. And then so forth with residential and seasonal properties. A little bit of trend history here on the market value in the community. You can see back in 2009, we were over $2 billion. And the trend to 2013 is where we bottomed out. We're roughly about 1.6 billion at that point, and we're up to about 1.7 billion today. So you can see properties went down quite a bit, and now they've kind of leveled out to a slight increase. Most importantly, look at the residential, the red graph there. You can see residential properties over the last couple of years are seeing significant value decreases. They've kind of stabilized, and the first time in a couple of years they've actually went up. Again, they're nowhere near the same amount they were in 2010, 2011, or 2009, but they are starting to trend up here for the first time in a couple of years. Kind of the offset to that is commercial industrial. While residential was decreasing from 2009 to 2013, they were maintaining their value, in some cases increasing. So as the levy gets dispersed based on values, they were seeing sometimes some increases in their city taxes because of the value changes relative to what was happening in residential. We've kind of seen that flip-flop a little bit here in 2015. Now residential went up on average, but commercial industrial went down. So the trend over the last couple of years was kind of reverse. It's kind of changed here in 2015. And that's shown by the purple graph there. How does this market value allocation look? 70% is residential, 20% commercial. Apartments 3.6, agricultural 2%. Other like cabins, so forth is 3.7. Railroad property and different things. Other impacts. Changes in one area may have an impact on another. Valuation changes. The county assessor typically gets to 1/5 of the city every year. I know they were in Eastern Elk River last year looking at the sales, the amount of foreclosures that were coming out of the system. So they go around, do like 1/5 of the city every year and look at the sales in those areas. It just happened to be Eastern Elk River last year. So again, value changes in one part of the community versus the other has impacts on how the levy gets dispersed. Legislative changes. You'll notice on your statement there's a market value exclusion. That was implemented a couple of years ago. And you'll notice if your value went up, your exclusion went down. That's because when values were going down, that exclusion went up. Now that values went up, that exclusion comes down and it zeroes out over $400,000 in value. So if you notice your statement, you'll see not only did your value change, but the state market value exclusion changed because your value either went up or down accordingly. That replaced the homestead credit several years ago. Improvements to properties have impacts. For example, if you put on a deck or you redo your basement, those all have impacts on values. It may not show up right away in the county assessed value, but it does eventually show up as the building permits are pulled on those things. Again, they get to 1/5 of the community and they look at on average the rest of it. So improvements definitely have an impact. Next I'm going to talk about the city tax levy. Tax levy history, components of it, and levy by use. What is it used for? Here's the tax levy history for the city of Elk River since 2006. This includes debt service, city operations, tax rebates, and the library. Those are all components. Debt service, for the tax levy. Again, the last couple of years the levy hasn't went up. This year we're looking at a final levy of 1.66%. The council made some structural changes the last couple of years which will benefit the community long-term financially. As, for example, with street improvements, we implemented a franchise fee. Again, there we were looking at $200,000 to $300,000 every year in debt service because we do projects every other year. So the compounding effect of that is no longer on the property tax levy, nor is the 300 some properties that get assessed every other year. So again, those structural changes keep the property taxes as low as it can be relative to that program. And also the council is looking at a long-term structural solution to stormwater. It's another mandate we have at the city level. And we looked at does property taxes make sense for that? Well, the council is looking at a stormwater utility like many other communities. So again, it's balancing the level services with the property tax levy that's most applicable. And here's the components of that levy. The general fund, that's the chief operating fund of the city. That's your police, fire, park maintenance, building maintenance, IT, community development, general services of the city. The library is another component. Debt service, tax rebates. And the preliminary levy, we're looking at $10,056,000. That was a 2.05% increase. The revised levy is looking at $10,017,000, which is 1.66%. We were very fortunate to get some lower than budgeted fuel rates for next year, so we were able to make a significant adjustment to the levy. For that end, we made some other miscellaneous changes between September and the end of the year, what we're looking at now. So again, this final levy, if this is the final levy, it'll be recalculated on your property tax statement, so it'll be lower for your city share. Levy by use, general fund makes up 94%. Debt service 4%, library 1%, and economic development rebates 1%. Next I'm going to talk about the general fund budget. The revenues, expenditures, changes in this 2015 budget, and just a cost per capita of city services. On the revenue side of things, again, property taxes aren't the only component of the budget system. We do have other revenue changes. mainly development related, but the biggest change has been charges for services, up 13%. And that was due to the school liaison contract being renegotiated, a tri-cap revenue we're gonna receive, and some engineering reimbursements from the project, from the 2015 project will come back to the general fund to offset salaries. 72% of the general fund is made up of general property taxes. Transfers in are 13%, water, sewer, liquor, garbage. License and permits 4%, and intergovernmental revenue 2%. Those charges for services make up 6%. Expenditure changes for 2015. The proposed budget at this point does include a full-time equivalent drug task force officer, so that is an additional FTE for the city. It does include more funds for buckthorn removal to maintain the assets of the park system. It's a contractual service that is proposed to increase. Fireworks, the mayor council budget includes money allocated for the fireworks as a line item in the budget. The budget continues to have the sales tax exemption that we were fortunate to get last year's budget. That continues forward. It's not on all our funds. Some of our enterprise funds are not exempt from sales tax. We do have adjustments in there from some of the para pension changes and a cost of living adjustment. And we did have to make some adjustments for inflation this year. Fertilizer was going up. Again, fuel we were able to bring down. But overall, it was like $59,000 in inflation adjustments on $13 million, so it was less than 0.5%. But we did have to make some of them throughout the system of the budget. There are a couple of staff changes proposed outside of the drug task force. The only other full-time equivalent was an HR technician. We have some staff hour adjustments for seasonal, para classification, part-time, and we do have a labor position that's being reclassified to a maintenance tech. There's no new FTE with that. It's just going to the more appropriate position that's needed for the building maintenance staff. Of those, so we have a $13.3 million budget. Public safety went up 6%. General government, that's your community development, IT, administration, 2.76. Public works, 1.74, and culture and rec, 0.95%. And again, the tax levy is going up 1.66. It's offset with some of those other revenue increases. How does that break out? Public safety makes up 48% of the city budget. Public works 14, culture and rec 14, and general government 23%. By category, obviously we're providing services, so personnel is 78% of the city budget. Supplies, that's your fuel, miscellaneous office supplies, different things, 8%. Other services and charges, 14%. What's included in that category is like our assessing contract. We contract out assessing with Sherburne County, our audit fees, any other services. Some building maintenance services we contract out, like lawn mowing and different things. So those are other services and charges. And this is just per capita cost of the city services. Public safety would be $22, $11 general government, public works $6, culture and rec $6. Obviously, this is not all tax levy, only a portion of this is, but that's just per capita. It's one of the matrix we look at when we're comparing ourselves to other cities and so forth. Next, we're going to talk about tax impacts. We'll look at a city tax comparison between us and some other communities. We'll look at a residential tax bill, the distribution of those taxes, a commercial tax bill. We'll do a tax rate comparison, and we'll look at city tax estimates. These are the Sherburne County 2015 proposed tax rates. Again, tax rates we only look at as a benchmark because every community is different. Some communities offer police services, some don't. Some offer fire service, some don't. Certain levels of park maintenance that some communities offer versus others. So there's all kinds of variables that go into the city's tax rates. But nevertheless, we do use it as a benchmark. And in Sherburne County, you can see highest to least from left to right. Elk River came right there in the blue with the arrow pointed there. Our proposed rate is 47.3. Statewide averages of the tax rate for cities is 48%. So we are below the statewide average for last year. And what I did is I looked at this Sherburne County average. I took them all, and including the school and the county, and saw what the average was, and it was 56%. kind of graphically showing Elk River's tax rate over the years. Maybe a little hard to see, but we're that light blue line by the arrow. And what you can take away from this is we've been fairly stable. You can see other communities have been rising up and down with values. Elk River has been fairly stable over the last, since 2008. Again, part of that is credited to long-term planning we do here at the city too. The distribution of the property tax dollars for the city of Elk River. On a $200,000 residential homestead, the city makes up 30% of that bill. School district 33%, Sherburne County 34%. Others, Regional Rail Authority, EDA and HRA, make up 3%. Shifts quite differently under commercial industrial. So on a $1 million commercial industrial property, Elk River is 23%. Independent School District is 25%. They also have to pay a commercial state general tax rate, and that's 25% of their tax bill. Sherburne County is the other 25%, and the other is 2%. So you can see under residential, we make up 30% of the bill. Under commercial industrial, City of Elk River is 23%. City tax comparison, and again, every community is different. Elk River is the purple bar there. What I did is pulled a bunch of cities around the metro and us. And you can see we're to the left of the average in the middle. But again, some of the communities to the left of us have the Met Council taxes that you have to add on, including Met Transit, Met Council, and Mosquito Control District. So this is just excluding those, just a macro environment. But you do need to add those to some of the communities in the Metropolitan Council, which we don't have. And state aid differences and level of services difference also have to weigh into this example. But again, we're lower than the statewide average on the tax rate comparison. Tax capacity rate, also known as the tax rate. Last year we were 48.5. Based on our next tax capacity increase, slightly around 5%, and our levy 1.6%, our tax rate would go down to 47%. The county projected to go from 54 to 52. School 51 to 50. Overall 159 to 155. And with the final levy, if it's approved, we'd go to 47.1. So that's the city overall tax rate and the other taxing entities in the community. Next we'll look at city tax estimates. The first example is on a residential property with no value change. This is just a simple example. Properties go up, properties go down every year. On a $165,000 home, the preliminary levy, the value, city taxes go down 2.5%. With the final revised levy, go down 2.95%. Again, because the city tax rate is going down. Now looking at another example, a residential property that went up 8%. The taxes on a preliminary levy would be $50 annual increase, not monthly, 7.3%. With a revised levy, it would be $47 or 6.8%. Again, just because it went up 8% doesn't mean the city taxes are going to go up 8%. Our tax rate went down, so it offsets some of the value increases. And also, you did not have as much market value exclusion either. So there's a couple other factors that go into that. Different story on commercial industrial. This example is minus 2%, but I've seen some much lower than this. On a $1 million property, the preliminary levy $425 decrease, 4.55. And the revised final levy 463 or 4.96. That doesn't mean all commercial industrial went down. Likewise on residential, I saw some with some negative market value increases too. Some commercial industrial with expansions or just arm's length transactions and sales may have had their value go up too. So again, this is just an example. Now we do have some other funds in the city. We have special revenue funds and enterprise funds. Let's start with the special revenue funds. We do have a library budget. It's $98,400. 1% of our tax levy goes to the library fund. The ice arena budget is $706,000 next year. No property tax levy goes to the ice arena. And then we have a landfill fund, $105,000. Again, no property tax goes to that fund. And then we have our safety budget, which is funded by a dividend we receive every year based on our experience with claims and workers' comp claims. That's $37,100. We do have 3 enterprise funds, and next year we may have 4, so I'm going to talk about if we had 4, how it would look. First one is our liquor store. We're budgeted to transfer out $656,000 next year, and where that goes to the Park Improvement Fund and the city's general fund. Sanitary sewer, we do have a 3% proposed rate increase. Again, we look at this fund over several years. We are going through a major plant expansion right now, roughly $18 million over 2.5 years for capacity and compliance requirements. Our garbage fund, we have no proposed rate change in the trash service provided by the city for next year. And the council is looking at creating a stormwater utility fund. It would be the first year of that fund next year. Right now we have a capital project fund, but if we go to a utility, the more appropriate classification is an enterprise fund, like many other communities. How do these budgets look? The liquor fund, $6.8 million in revenue, 6.5 in expenditures. Sewer fund, $6.2 million in revenues, $13.4 million in expenditures. The reason that is out of balance is we issued $10 million in general obligation revenue bonds last year, so the project is over 2.5 years. We got state grant to use and some internal funds for that project, so that's why that one's out of balance. But again, we look at it over long term, so we saw this coming. The garbage fund, $1.3 million and $1.3 million in expenditures. Stormwater, $468,000 revenues, $978,500 in expenditures. Capital outlay is $360,000. Again, that's maintenance of our ponds, our assets, runoff of water. And the reason this one is out of balance is now we need to record depreciation expense with enterprise funds. So there's $400,000 depreciation expense in stormwater. So if you subtract that out, using the funds we'll have left over with the capital project fund this year and transferring in, we will be in good shape still with our stormwater next year, since depreciation is a non-cash transaction. Next, I'm going to talk about some state tax relief programs that are available. First one is the Homestead credit refund. And I'm not going to go into all the requirements of this, I'll just stick to it at a high level. When property taxes exceed a certain percentage of household income, you may be eligible for that. There's a targeting property tax refund when a home has increased by more than 12% over the previous year's tax, and if the increase is over $100. The max refund is $1,000. There's no income component with that one. There's senior citizen property tax deferral program. It's qualified homeowners over age 65 to defer a portion of their property taxes into the future. There also is some renters refunds out there. But again, I would talk to your tax preparer and also visit Department of Revenue to get the exact details. I just want to highlight these so at least be a little educated on some of the refunds that are available out there. More information can be found at www.revenue.state.mn.us or by calling 651-296-3781. Someone there will be able to help you if you want to ask about these programs, or you can keyword search property tax refund on the website if you go to Department of Revenue.